This is the luxury world. Get inspired with us today and tomorrow. Many watch enthusiasts noticed a significant rise in watch prices over the past year. It seems like a common observation lately. It is almost nostalgic to think back to when you could purchase a Rolex Submariner for that same amount. But it is undeniable. Watch prices have been steadily increasing with no apparent end in sight. On the flip side, there is a decline in people's interest in purchasing watches compared to a few years ago. As a result, we are seeing higher retail prices for watches alongside a decreasing demand. This prompts us to wonder about the future direction of watch brands. Will they eventually price themselves out of the market? What lies ahead in the next couple of decades? Can enthusiasts leverage the situation to their advantage? These questions beg for answers, but as they say, money complicates everything. In this video brought to you by the Luxury World, we will be discovering the future of watch price increases. Join us as we delve into the world of luxury watches. If you have not subscribed to our channel yet, we strongly encourage you to do so now to keep updated on our upcoming video releases. When assigning a monetary value to something, our perspective inevitably changes. We start considering aspects like whether we can afford it, why it is priced so low, or whether it is too prestigious for us. With watches, as their prices rise, we naturally expect the quality to match the cost. Currently, in this hobby, we are at a point where the escalating prices do not always align with the perceived quality. While new buyers may not be fully aware of this, enthusiasts feel the impact of these price hikes. As the cost increases, the quality seems to stagnate or even decline, making it challenging to justify purchasing these watches at their inflated retail prices. This trend will eventually dampen enthusiasm in the long run. A few years back, we witnessed a significant surge in prices alongside a decline in other aspects, which is quite intriguing. Watch speculators and the law of supply and demand. During the period from 2020 to 2022, often referred to as the era of watch speculators, there was a notable global event that had profound effects on the market dynamics. This period witnessed a surge in speculators entering the fray, acquiring watches with the primary intention of profiting from their resale on the gray market. This influx of speculators marked a significant shift for enthusiasts, as the accessibility of desired timepieces dwindled due to others with more substantial purchasing histories swooping in. While this sentiment may not be universal, there was a prevailing sense that many individuals were obtaining coveted watches for motives divergent from genuine appreciation or long-standing pursuit. The escalating demand resulted in popular models commanding prices several times the retail value, leading to widespread incredulity among enthusiasts. Despite the frenzied market activity, there was an underlying acknowledgement that such unsustainable trends would inevitably reach a point of equilibrium. Concurrently, the heightened demand left reputable brands struggling to maintain adequate stock levels, amplifying concerns and instilling a sense of urgency within the industry. Anticipated watch trend. Rival manufacturers engaged in fierce competition to outshine each other, particularly through the introduction of similar color dials. The emergence of trends like the Tiffany blue dial and designs inspired by the 1970s gained significant traction, with every brand striving to capitalize on these popular themes. This proliferation of trends, while initially exciting, eventually led to a sense of saturation. However, it also provided valuable insights into consumer preferences, offering brands a clear direction to follow in meeting market demands. Watch deflation. As we transition from 2023 to 2024, a notable shift occurred in the watch market dynamics. Dubbed the era of watch deflation, prices for watches on the secondary market experienced a sharp decline. Previously inflated secondary prices plummeted, resulting in a more moderate markup above retail prices. While the market bubble did not burst, it certainly lost some of its inflated pressure. Simultaneously, brands began to take notice of the lucrative resale market and sought ways to capitalize on it. Discussions ensued regarding restructuring pricing schemes, and some brands even ventured into establishing certified pre-owned programs. By doing so, they aimed to exert greater control over market demand and potentially increase revenue per sale. With demand soaring to the extent that brands struggled to keep items in stock, there was a clear opportunity for brands to maximize profits while striving to remain competitive in the luxury watch market. Watch brands competition. Another factor contributing to the escalating prices is the tendency for brands to emulate their competitors by raising their prices. This behavior is compounded by the brand's desire to maintain an image of luxury, which they believe necessitates higher price tags. Consequently, there is now an expectation that luxury watches from major brands must command a minimum price, typically starting at around 5,000 units of the respective currency, whether it is pounds, euros, or dollars. Amidst these price hikes, there is a broader trend of declining interest in watches compared to previous years. This decline contrasts with the period when demand was at its peak, prompting brands to invest heavily in expanding production capacities. However, with the current subdued interest in luxury watches, brands find themselves in a challenge, needing to recoup their substantial investments. Luxury watch brands have outgrown their initial expectations, leading to a massive portion of consumers being unwilling to pay inflated prices. The proliferation of smartwatches, particularly those from Apple, has further diminished the appeal of traditional luxury watches. This shift poses profound questions for the Swiss watch industry and the broader luxury watch market. Despite flashy new releases featuring innovative materials and technologies each year, many consumers are deterred by the exorbitant recommended retail prices. Using Omega as a prime example, previously admired for its quality and affordability relative to Rolex, the brand now faces scrutiny for its escalating prices, mirroring similar concerns across the industry. Retail and demand for Omega and other brands. As enthusiasts, we understood we were getting excellent value for our money. Let us be real, they are fantastic timepieces. However, the introduction of innovations like the 3861 caliber, the standardized movement for the Speedmaster line, has provided Omega with the impetus to significantly raise their retail prices, often by 15 to 20%. It is worth noting that these are not limited edition or bespoke pieces. They are standard Speedmaster professional models. Many of us can recall a time when these watches were priced much more modestly. However, it is not as simple as pinpointing one single cause. Rather, it is a complex interplay of several factors affecting distinct brands in diverse ways. Some brands are engaged in direct price competition and are striving to elevate the perceived quality of their products. Others are attempting to align their prices with those found on a gray market, seeking greater profitability from each sale. Concurrently, some brands are responding to consumer demand by increasing production capacity and establishing new manufacturing facilities. This situation is multifaceted, with each brand navigating its own set of challenges and opportunities. The future of watch price increase. The future of watch price increases raises concerns for many of us, as the current retail prices are increasingly difficult to justify. This reflects a need for brands to reassess their strategies and undergo a reality check. Instead of pursuing a more cost-efficient manufacturing approach and aligning prices accordingly, some brands are doing the opposite by continuing to raise prices, surpassing the threshold of consumer interest. If this trend persists, it is likely that brands, especially the major players, will experience decreased sales. This could have detrimental effects on the next generation's perception and purchasing behavior toward luxury watches, particularly when more affordable alternatives are readily available. However, amidst these challenges, there's potential for brands that adapt intelligently, such as those that price their watches sensibly. Ultimately, addressing these price hikes requires consumer action. By being discerning in our purchases and mindful of the value we are receiving, we can send a message to brands about our expectations and preferences. Communication through our spending habits may be the most effective way to influence the industry and encourage smarter pricing practices. What are your thoughts on the topic we shared in this video? We would like to see your answers and opinions in the comments section. If you liked this video, let us know in the comments section below. Remember to follow us too and give us a thumbs up. Once again, this is the Luxury World, and we look forward to seeing you again in our future videos.